Hey guys, this is the GPS Trading Telegram channel where I share every single one of my trades, my live entries before I place them in the market. So as you can see, I share all my entries here. It doesn't matter if it's a winning trade or losing trade. I share those results here in this channel. So if you haven't joined this yet, the link is in the description. So in this video, I'll be explaining two important trades that I took this week, which I also share in this Telegram channel. So this is the first trade, a gold trade. So this is the setup that I shared before I took the entry. This is the entry point, and this trade turned out to be a winner. So I share all these results here, and this is the trade. I'll explain the technical concepts behind this so you can understand the market, the movements of the market even better. And the another trade is a Euro USD trade. This is the setup that I shared in this channel before I take the entry, and this also turned out to be a winning trade. So in this video, let's look at the technical reasons behind why I took these two trades. Okay, so first let's look at the Euro USD trade. Without using replay button, you won't be able to understand anything in my chart. Okay, so the first thing you should be clear before you place any entry is which trend is the market currently at. So to know that, if you're a beginner, you must go to the higher time frames. I use 1 hour, it's more than enough. If you use 4 hour, it's completely fine. So if you see here, if you just zoom out and see here, the market used to be in downtrend. The market used to be in downtrend. But right now the market has changed. The market is currently in uptrend. So our job is find the latest structure where we can use that structure for trading. So this is the latest structure where the market gave upside BOS. So now I will mark this point as my valid low. So this means that when the market comes down and takes this low, the trend has changed from uptrend to downtrend. So this is how you should find bias in the market, by using the market structure. Okay, so that's just for bias in the higher time frames. I usually don't look at the higher time frames often. Okay, so now you get the entire concept on what's happening in the market. So now this is the primary structure. This is the primary structure. Okay, now we should concentrate on minor structures, which means this is the minor structure. As the market comes down, we don't want to miss these huge moments. We can take sell here, sell here, sell here, and when the market breaks this high, we can take buy here, buy here. So that's how the market structure works. Okay, fine. So if you see here, the minor trend used to come down, and it used to come down, and here the minor trend switched from downtrend to uptrend. So the minor structure is uptrend starting from this breakout structure. Every single one of my trades is poor trend. None of my trades is counter trend. The probability is very low if you take counter trend. So the market gave an upside BOS. So I took this entry. I won't explain this entry for time being. And then the market broke this valid low, which means the minor trend has switched downtrend. So this is my latest structure in the minor structure, and I'll be looking forward to take sell entries from these order blocks. Okay, so this is the overall point of view you should have in the market. Okay, so I took this entry on 8th of April. If you want to exactly check out this entry, join the Telegram channel. Okay, so what has happened in the market? If you notice here, after giving us a BOS to the downside, the market accumulated some liquidity here. After taking this low, the market once again comes up and take this liquidity. This is nothing but inducement. This is a pretty complex concept in SMC, but it doesn't matter if you don't know this. Just observe whatever I'm saying here. So after inducement, in the minor structure, a fractal structure starts to form, which means everything that's happening to the right side, all this is fractal structure. Everything in the left side before breakout structure, that's minor structure. So you should not be fooled that a structure is forming here and you should not take entries here. You should not take buy entries here because this is a fractal structure. This is what many people call as liquidity, stop hunting, all those things, manipulation in the market. But none of that is true. This is how the market works. So after an inducement, a fractal structure starts to form. This is where it traps all the inexperienced retail traders. Many people will mark an order block here and they will take an entry here and they don't even know what they did wrong, right? Because they didn't see that the entire minor structure is in downtrend. They didn't notice that, and then they followed only this structure and they believed this order block, and when they take a buy entry, obviously your stops will be taken out. Okay, so what you should do here is wait till the fractal structure changes downtrend. So how to find when the fractal structure changes downtrend? The same thing that we did here, another inducement. So we got a beautiful inducement right here. We actually got a small inducement right here, but doesn't matter. We should take the one that stands out. So this is a beautiful inducement to the downside. What's this? Okay, sorry about that. So we got a beautiful inducement to the downside, which means this structure, right? This is a beautiful sell side structure. You can trust fully any order blocks present in this structure. Okay. So now our entire perspective is to take sell entries. So first thing you should do here is take out your fib, put it from the top to the bottom of the structure. So there is only one order block that's properly visible here, which is this order block right here. So obviously I marked that order block. So if you're wondering that why I took this order block and why I didn't take this order block, the answer should be pretty self-explanatory. This order block was the one who led to inducement in this structure. This order block didn't do anything. It just moved after mitigating this order block and after taking this high. So it's just a liquidity movement to the downside. The real strong order block in the structure is this one. So this is how you should filter 2 order blocks. If you have 3 order blocks, this is how you should filter, okay? All right. So this is an inducement. The market took this low, which means this is an inducement. Like I said, it's a complex concept. No need to worry if you don't know this. Okay. All you need to know is you should only take entries in the premium and discount zones according to the trend. So now the market goes up, tags us in the trade. My stops are pretty low because every single order block is mitigated before this. So my stops are very low. And the second most important thing after placing the stop losses, placing the correct take profits. Because if you have very low RR, if you have very high risk to rewards, in the long term, your strategy will result in loss. So we don't want that, right? So where should you properly place your stops, your take profits? So your primary take profit, your first take profit should always be more than 1:2. I usually suggest you take 1:3, 1:2.3 like this. And your second take profit should always be in the lowest weak end of the structure. So in this minor structure, this is the weak end. To give you an example, this high broke this low, right? This low didn't break this high, which means this is a weak low. So this is where you should keep your second targets, right? So this is where I put my stop loss, my take profit. So let's see what happens. So the New York session started and the trade once again, after giving us a small inducement, once again it mitigated the order blocks present here. And this trade ended up being a winner. It gave about 1:3.5 RR. So these are all the things you should look before you place any kind of trades, okay? This is the gold entry that I shared in the Telegram channel. This is the entry that I took recently. So now let's go through the technical reasons. So as you know from the last example, the market is clearly in an uptrend. The market is clearly in an uptrend. Okay, so now if you see here, the primary structure is an uptrend. This is the biggest primary structure we got. Okay, so after we get a BOS, this is what happens. The market gives us a small liquidity accumulation here, breaks this high, and once again comes down and takes this liquidity. You should know this, you should be able to find this, because this means that this structure has become a stronger structure. You can take entries in this structure. I didn't take any entries in this order block because this is past the session, so I don't take any entries past the session. Okay, so the same thing happens. The market clearly accumulates an inducement, breaks the high, takes the inducement, mitigates in your order block, and then breaks the high. And this is the same thing that happens over and over in the market. Okay, so this is the point from where we didn't get a proper 50% correction. If you see here, if you look at this, we got a 50% correction here. If you look at this, we got a 50% correction right here. So this is the only point where the market just rallied up. It didn't give any correction. So the first thing you should do is, like I said, take out your fibs, mark the discount and premium zones. All you need is the 50% level. You don't need anything else. All those 6.5, 7.5, you don't need all those things. Okay. So the first thing you should note here is, when the market comes down, after giving us an inducement, like I said, it gives an inducement, which means now a fractal structure is forming. You should not take sell entries here, because this is where liquidity trap happens. You should never take sell entries there. If you want to risk, you can take a sell entry here, but never in these points. After the 50% mitigation, you should never take any sell entries here. Okay. All right, so the market comes down. Beautifully, the market accumulates liquidity above all these structures. So when the market comes down like this, you should already be aware that the market is going to push up and it's going to break this high. This is what you should be aware of. So I marked the 50% retracement. I just marked two order blocks here, the one in the extreme and the one in the middle. So you can take aggressive entries if the market comes to this extreme order block, because there is nowhere else for the market to go down. There is no reason for the market to go down. If it goes down, the only reason is the trend is going to change. So that doesn't happen usually, right? So in this example, I took an entry after it mitigated the 50% order block. So you cannot take any aggressive entry when the market mitigates the 50% order block. I took this order block after filtering it to the lower time frames. So as you can see, this is a 3-minute order block. Okay, I filtered this even more. So this is the order block that I took from the 1 minute. So I waited till the market reacted accordingly to this order block. So when the market reacted, the same thing again and again. Inducement. All you're looking for is inducement. So when the market accumulated this high, broke this low, once again the market accumulated this high, broke this low. I'm waiting for the market to break this recent high, which means the fractal structure, which is now downtrend, has switched uptrend after this inducement. So that's the exact thing that happened in this point. The market took this low. It gave us a higher high. It took this high, which means the fractal structure has changed uptrend. So now you can go for buy setups. So I took this entire order block because this is a pro kind of situation, which means both your fractal structure is an uptrend and your minor structure is also an uptrend. And let's not forget that the entire gold's primary structure is also an uptrend. So every structure is pro trend. You should never miss these kind of trades. That's why I didn't even filter this order block. I didn't even go to the lower time frames. That's why I took this entry. So this is what I call a sniper entry. After the mitigation of the order block, the market just rallies to the upside. You get very good risk to rewards for this trade. So it's still running, but I closed this right here. I have shared all these things in the Telegram channel. Okay, so if you want all those details, check that out. So guys, I hope this was helpful. This is the way I approach the markets. You cannot just look at one single perspective. You should look at the market in different perspectives. Only then you should come to a conclusion, and only then you should place any single trade. Alright, so this is the gold trade that we were looking at. Like I said, I share all the results, all my trades in this Telegram channel. So guys, I hope this video was helpful. I wish you guys success in your trading journey. Most importantly, I wish you peace. See you in the next one.